dollars are essentially predators for any weaker currency, like all these developing market currencies. And where Bitcoin comes in is a couple different ways. One is if it starts to get more widely adopted and liquid enough that it has less volatility, and the volatility it does have is still in an upward trend in price, and people have seen enough cycles, that's hard to ignore. So that's number one. And another thing to think about, that Bitcoin has to reach certain levels of market size and liquidity before it even interests certain bigger players to get in. So when Bitcoin had $1,000 in daily trading volume, a person couldn't put in $1 million.
Lyn Alden, a distinguished investment strategist and financial writer, known for her deep analysis of economic trends and investment landscapes, delves into the fascinating world of Bitcoin and its cycles, offering her expert perspective on its evolution, volatility, and the broader implications for global finance. Addressing Bitcoin's volatility, Lyn points out that it remains a significant factor until widespread adoption and liquidity minimize it. She draws attention to regions like Argentina, Nigeria, Lebanon, Turkey, and others, where people, amidst unstable local currencies, often resort to storing wealth in physical dollars or gold, sometimes even buying property as a tangible asset. Here, stable coins emerge as a modern solution, offering another avenue to access dollars, albeit centralized. Furthermore, Lyn delves into the macroeconomic aspects, discussing how rising public debt levels, particularly in developed economies, could lead to fiscal spirals. She explains how Japan's situation, with its heavy public debt and ongoing quantitative easing, might be a precursor to what other economies, including the US, could face. This scenario, where central banks are forced to monetize deficits amidst high inflation, could be the tipping point for currencies like the dollar.
But one thing is, I think that what matters for people is how many times they've seen it come and go.
Yeah.
So if you were not aware of like the first 3 cycles, for example, and you knew about it in the 4th cycle, or at least you paid attention to the price, you remember seeing it in a bull market, you remember seeing it in a bear market, you see it in a bull market again. You know, that for them, that's only the 2nd cycle, even if it might be the 5th cycle of Bitcoin. And when you look, of course, if you look at a price chart in linear form, you don't even see those earlier price bumps. So you only ever really have your memory, or in visual form, you see the past couple cycles. So I think people have to go through a handful of cycles, not just that Bitcoin's gone through those cycles, but that they've seen it gone through those cycles. I think that's important. And 2, the volatility is still an issue until it's not, basically until it's widely adopted and liquid enough. And I think there's a couple ways to think about this. So, I mean, if you're in Argentina or Nigeria or Lebanon or Turkey or wherever, a general trend in developed markets is that people want dollars. Like I know, like physicians in Egypt that stack physical dollars in their apartment for lack of knowing what else they're going to do with their savings. They might hold some gold, they might hold some physical cash dollars, and then they'll buy a second apartment, which might or may not be empty, just to have something more tangible, right? So. And one of the challenges in these markets is that banks and airports, you can only bring so much cash through an airport. Banks are only willing. Usually, it's hard to get dollars from the banks in these countries. Usually, you have to get out on like the street market, like the gray market or the black market. And stable coins are a way that kind of pierces in there. It gives people another avenue to get dollars. That's why they're somewhat popular now. But of course, the problem is they're still centralized, right? So all that someone is doing with a stable coin is, instead of trusting their local banks to hold their dollars, or not even being allowed to, it's basically just an offshore bank account for the middle class. That's what a stable coin is, and it's centralized, and it's just the central hub is not in their country. Now, so basically, dollars are essentially predators for any weaker currency, like all these developing market currencies. And where Bitcoin comes in is a couple different ways. One is if it starts to get more widely adopted and liquid enough that it has less volatility, and the volatility it does have is still in an upward trend in price, and people have seen enough cycles, that's hard to ignore. So that's number one. And another thing to think about, that Bitcoin has to reach certain levels of market size and liquidity before it even interests certain bigger players to get in. So when Bitcoin had $1,000 in daily trading volume, a person couldn't put in $1 million. When Bitcoin had $1 million in daily trading volume, a billionaire couldn't, you couldn't come in with $1 billion. It wasn't ready for sale yet, for example.
Yeah.
When it trades $1 billion a day, these large pools of capital, like a $1 trillion insurance fund, it's just, they look at that and it's like a small pond for them. It's like they would sneeze at it and it would move the price. When it does tens or hundreds of trillions of dollars in volume, then these bigger players can start looking at it. So it's almost like you have to kind of saturate, or at least you have to hit a certain level before you even get interest from the next level. So now we're at the phase where the BlackRocks of the world are kind of paying attention to it. So one is just, you can keep going up in that one psychological cycle. So people, once a person has directly seen 3 cycles, for example, that's hard to forget. And then 2, that liquidity. And then the other angle, like that's kind of Bitcoin winning. The other way is the dollar losing.
Losing,
like
yeah.
The dollar tripping over itself. So a lot of people here, maybe not everyone, is seeing what happened in the recent bond market move, right? So long end bonds have sold off dramatically in recent weeks and months. The yields are spiking.
Bitcoin stands as a potential haven. If major currencies falter due to unsustainable fiscal policies, and if Bitcoin continues to demonstrate resilience through multiple cycles, it could emerge as a more attractive store of value. In the macro sector, Egypt's annual urban consumer price inflation dropped to 34.6% in November, from 35.8% in October, pulled down by a slowdown in the rate of food price increases, data from the statistics agency CapMaz showed on Sunday. Annual inflation was slightly lower than predicted by analysts. The median forecast of 18 analysts polled had expected a reading of 34.8%. Month-on-month, prices rose by 1.3% in November, up from 1.0% in October. Food prices rose by 0.2%, but surged 64.5% year-on-year. Lyn Alden now takes us through the macro and how Bitcoin comes in to save the day.
Whether or not what happens in the next few months or whatever, I think that's not the big story. The big story is that historically, when you get larger and larger debt in an economy, eventually you run into a big bubble. And then what happens is the public sector absorbs that debt onto the public sector. Right? So that's what we saw in Japan over the past 30 years. We saw a gigantic private debt bubble, and then kind of a deleveraging, printing money, and then a lot of that debt is now on the public sector, and the private sector in Japan has less debt relative to other metrics than it used to, less net debt, because a lot of that's now on the public sector. And in the United States, we saw pre-global financial crisis, we saw more and more private debt growth. Then we saw the whole collapse and the money printing. And now we see some degree of household deleveraging and things like that, but all that debt's now on the public level. And then what happens is when you run into the next cycle or the one after that, and all that debt's already on the public level, you're getting higher and higher interest expense. You're not offsetting it with lower and lower interest rates, right? So for example, during the past 40 years in the United States, we had higher and higher public debt to GDP, and we had lower and lower interest rates. So the interest expense on the public debt was never really a problem. But once we hit the point where you hit 0 and you bounce off 0, and now you're just kind of either going sideways or you're going up in interest rates while you're still going up in debt to GDP ratios, that's when you start to get into an outright fiscal spiral. And if the Fed finds itself having to do QE, even when they have above target inflation, because they just have to monetize the deficits, that's kind of a checkmate scenario. We already see Japan in that scenario. So if the dollar trips over itself, and the Fed finds itself in kind of what Japan's doing, but Japan has a trade surplus, current account surplus. They've built up a positive net international investment position. The United States is running a structural trade deficit. And if they also find themselves forced to constantly do QE just to maintain the bond market, and Bitcoin's still here, and people have seen 3 cycles of Bitcoin, I wouldn't want to be short Bitcoin, let's say.
Bitcoin dropped 7.5% Monday morning, its steepest intraday drop since mid-August. Bitcoin is still up over 150% this year, though the massive, sudden, and unexpected red candle on the charts is a reminder of the largest cryptocurrency's volatility. Last week, it seemed like very little could stand in Bitcoin's way, with many of the industry's long-standing issues seemingly resolved. So why did Bitcoin drop today? It might be better to start with why it was climbing in the first place. For instance, Binance, the largest and most controversial crypto exchange, agreed to pay a $4.3 billion fine to U.S. authorities to keep operating, a historic penalty it seems likely to survive. This settlement also cast the U.S. Securities and Exchange Commission's legal imbroglio with U.S.-based exchanges Coinbase and Kraken in a better light. The regulatory front in the U.S., generally speaking, also seems to be easing. If there isn't yet regulatory clarity, that old industry adage, proposals have been made by high-ranking legislators giving a good indication of what's likely to come. There are also predictable events like Bitcoin's scheduled halving next year, when the network cuts the amount of Bitcoin that enters into circulation in half, and the potential for the SEC to approve a Bitcoin ETF application. Market watchers have been talking up both events, and the ETF could be said to be the prime driver of Bitcoin's price recently. Interest rates, managed by the Federal Reserve, are at their highest level yet in the 21st century, as the U.S. central bank works to quell inflation and cool an overheated economy. Many experts think the Fed's work will soon be done, with some saying it may even retrace ground and lower interest rates in the first half of next year. Lowered interest rates are good for Bitcoin in the same way it's good for economic activity. It makes money cheaper by making it cheaper to borrow, which means there is more money around, period. Then, because lower interest rates make safer investments like government bonds less attractive, by lowering the expected return on investment, that capital has a way of working its way down the risk curve, towards asset classes like crypto. What do you think about the fast-paced adoption of Bitcoin? Do you think anything can make Bitcoin go back down to all-time lows again? Let us know what you think in the comment section below. Also, don't forget to subscribe and turn on notifications. Thanks for watching.
Hey Savvy Finance enthusiasts, massive shout out for being the heartbeat of Savvy Finance. Your support has been the wind beneath our wings, and we can't express our gratitude enough. Now buckle up because we've got an exclusive deal just for you. Ever wanted a slice of the action? We're offering a golden opportunity to own part of our YouTube channel's potential future revenue. This isn't just an investment, it's an invitation to be a part of our story. Investing means you're not just an investor, you will be a participant in the future of Savvy Finance. No cheesy lines, just a genuine call to embark on this journey together. But wait, there's more. Your mission, should you choose to accept it, become a Savvy ambassador. Share our videos on every platform: Facebook, Twitter, LinkedIn. Your shares amplify our visibility, potentially translating to more views and more YouTube revenue. Here's the kicker. If our viewership increases, we would not be just growing financially. We would be making a tangible impact by spreading valuable financial education. Now the icing on the cake. Invest and you'll score exclusive access to our private Savvy Finance Discord. Here you can chat with Savvy Finance, swap ideas with fellow investors, and be at the forefront of exciting developments. Click on the link below to register your Gigastar account. You can also find the link to my offering page in the description below. Get your Gigastar account ready, review the offering details, and let's embark on this thrilling venture together. To the incredible Savvy community, thank you for being the backbone of our success. Your journey is my journey, and together, we're creating waves. Cheers.